There's just so much to talk about in so little time. So, in order to talk about what I need to discuss, let's combine some of the topics and information. First, one of the viewers of my recent video where I postulated that the market is getting ready for a move similar to 2016 thought I may be really sticking my neck out. Okay, fair enough. So, in response, I'm handing over this sharpened axe to cleanly remove my head if I am wrong. And longtime viewers will know that I've been wrong, and very wrong. So, in the spirit of the comment made, I restate that this is only my opinion. Each investor is totally responsible for every investment decision. My attempts are only to shed light on what I believe is happening and, to the best of my ability, show the support for my statements and conclusions. And this now brings me to the point that in every circumstance, there can always be a black swan event lurking. For those unfamiliar with a black swan event, in terms of the stock market or the economy, it's an unpredictable event beyond what is normally expected of a situation and has potentially severe consequences. Black swan events are characterized by their extreme rarity, their severe impact, and the practice of explaining widespread failure to predict them as simple folly, but only can be done in hindsight. And this is why my last Sunday evening video contained a black swan because of the events unfolding in the US and China trade dispute. The caution is that at this time the trade dispute appears somewhat overblown. However, investors may also be underestimating the turmoil that is now stirring under the surface in China that goes well beyond the trade dispute. And I'm referring to China's banking instability and the Hong Kong protests. In my opinion, and contrary to popular opinion and the media, I believe it is not China that is winning the trade war. It is the US and Trump who has the upper hand. If you are paying attention, and many are not, and that's what you pay me for, today was the failure or bailout of a third major Chinese bank. I don't know the size of these banks because the Chinese aren't good at financial reporting, but they are not small. So the lesson, be a prudent investor, be suspect of my advice, and be prepared for a potential black swan event at any time. So let's now go to our charts. In the recent Make Money video, we spent a lot of time on the monthly chart going back 20 years. So today we're just going to focus on this one chart here. This is the spiders, the 6-month daily chart. And as you can see, we closed at 291.62 on Friday with the previous peak at that point there and the saw off down here and the bounce on up here to that point. Some may think this is a dead cat bounce, which basically means that it's just a bounce and it's a temporary bounce. We'll have to wait and see. I kind of think that there's some validity to that, and we'll discuss that here in a second. But basically, the bounce did move us up here back into that 50 EMA, where we kind of hit it and we're entangled at that point there. And the 20 EMA is just slightly above that. So we may be wrestling with this for a while. But I think that we're going to probably lose that wrestling match just by the way the Mac shows. We'll get to that again here in a second too. But going back to a similar pattern, we had the top at that point, this sell-off down here in, say, early mid-May with the dead cat bounce up to that point and a little bit of tangling with the 20 and the 50 EMA in this area, but it finally got pulled back down to this point here. If you remember, in that late May, early June, the Fed started talking easy money, which pulled the market out of this nosedive here, and we headed on up to this previous peak there. So, in some respects, though, this current downtrend has some similarities, and so that's why we'll focus on this previous downtrend in that May to June time frame, because there's a lot of similarities. And let's go see them here at the MAC. And you can see in the Mac that we definitely came under the fast line, came under, tried to move up through the slow line. It got reflected back down here to this level where we're at now. And as you can see, that's got a lot of similarities to this May to June move there, where the fast line came under. It attempted, but just a real lame attempt at breaking back up through the slow line, but got reflected back down here to this point, and that's kind of where we are right now. And as you can see that similarity here, there's a big difference between the fast line and the slow line in between these two areas. And that's a lot of distance to make up in a relatively short period, kind of like what it was here to here. And what happens is that the market kind of trends sideways or up maybe perhaps, but gets reflected back down in a failed attempt for the fast line to move through the slow line. And it comes on back down here. Now, this was the easy money here, so we'll just have to wait and see what's going to happen here. But I do think that there's a lot of spread here that the fast line's not going to be able to make up here in the next week or two. So I think it's going to get reflected back down. I don't know if we're going to go all the way down, say below that -2 point or not. It doesn't really matter. I think whether we go down here or whether we go sideways, we're just going to have to mark some time here. Let's go back up to the price chart and look at the ramifications of that May time frame. Again, the bottom here, it moved on up here. It got reflected back down to here. So all of this took a couple of weeks or so. And I think that we were tangled in that 50 and 20 EMA. And I think that we're going to get reflected back to some point. I can't say that we're going to fall any further than this level here. As this sort of exceeded the previous level. I don't know if that's going to happen. I just think that we're going to either come on down here or just move sideways. We need to burn off some time and some of that energy that's in this fast line. It's not able to make it up through the slow line. So we're going to have to go sideways in one form or another. It doesn't really matter to me. And then moving on down here, you can kind of see that in the histogram. Certainly the downtrend there, the attempted recovery failure, and then finally back down there to that bottom, and then off we went. So here we are. We had the bottom there. We're kind of getting up here. So I think we're going to fail. I think that's the probability. We'll come down a little bit, and then we'll make our way. But we're going to have to mark some time before we can see exactly what's going on. The price rate of change has made a valiant attempt at that bottom and then fast line moving above the slow line. But I think we're going to have some sawtoothing to do like we did in here and then move sideways more or less. Looking here at the RSI, we're at relatively weak, 44.33, under that 50 or midline. So I think the same sort of thing is going to happen as did in this time frame here. So we'll just watch and wait for that. The stochastics look somewhat similar as well with that bottom here, this bottom here, and that move up and over. And we have a move up and over. So now all that remains to see is if we do get reflected back on down here and perhaps move down into that oversold territory as we did in this area here. We'll wait and see. We do have some pretty good red days with a couple of good green days, but for the most part, there's a decent amount of selling here, and I don't think the selling is over yet. So into the Williams, and that's going to give us kind of a reflection of what the other oscillators are showing. I think we're going to do some sawtoothing with that down here as we did in this time frame here. This came down to its weakest point at -100 there in late May, and we're only about say a -90 and go sideways. So we're going to just mark some time, watch the market, see how things develop. And during that time, the monthly chart and the weekly chart will start giving us an idea of what to expect in the future. I'm still holding with my longer term scenario where I think the market is telling us that it does want to head up higher, but I think it's got some unfinished business down here. So let's just be patient, watch and learn. And for today, that's ChewDog Charts. Thank you.